And about 4 or 5 years ago, I put most of my family's portfolio, actually all of it, into Berkshire Hathaway. And over the past 4 or 5 years, the stock price has remained rather steady, and I've withstood the year 2000 when friends were making 50% and I was losing 50% on my investment. But I have to admit, when I read your Fortune article last year and you referred to the stock price as expensive, I felt badly. Now, I spend my days sometimes having fun figuring out the value of Berkshire Hathaway. But at night, after that comment, I could also wake up in worry and fret. And I realize you talked recently a lot about the qualitative and quantitative aspects of things. And I guess I would like you, with your self-reflective position and knowing that I'm asking you to do something like maybe talking about your breathing, what went into that comment to call the stock price expensive in terms of your weights and measures? What price, what value? What do you think about the company and its stock price when you say it's expensive?
I think I don't remember the exact wording of that article, but I'm quite sure that I told the author of that article, and I'm almost positive it was in the article, that I said I thought it was more attractive than owning the general market or the S&P. So I was saying that I preferred it to the general market. I'm certainly happy having 99 and a large fraction percent of my net worth in it. I've never sold a share. I am not the least bit uncomfortable about holding it until the day I die, and quite a bit thereafter. But I have not thought stocks were cheap at all for some time, and I've never wanted to encourage anybody, particularly in the last few years, to buy Berkshire or any other stock, because the market, I felt that I felt we had a great bubble, and I think Berkshire's value has improved. I think Charlie does too, fairly significantly in recent years. And I would, if I had a chance to swap tax-free my Berkshire for the S&P 500 or for any mutual fund or anything, I wouldn't give it a thought. But that does not mean I think either Berkshire or stocks are cheap. Charlie?
I've got nothing to add to that.
I don't think we've ever recommended the purchase or sale of Berkshire that I can remember. We did say at one time we would repurchase shares, which has a certain underlying message to it. And we said at other times we wouldn't buy shares. That doesn't mean we'd sell shares at all, but we wouldn't have bought them under the prevailing conditions. But we've stayed away from recommending, actually, not only the purchase or sale, not only of Berkshire, but just of any other specific shares. We've only given our views occasionally on what we think about the level of the stock market generally. But I do think if you go back and look at that article, I wish I had it here, but I think you'll find that I said I preferred it to equities generally.
I do think that there's a lot to be said for developing a temperament that can own securities without fretting. I think that the fretful disposition is it's an enemy of long-term performance.
Well, I think it's almost impossible if you're to do well in equities over a period of time if you go to bed every night thinking about the price of them. I mean, Charlie and we think about the value of them, but we would be happy, just as in that movie, if they closed the stock exchange tomorrow. Dick Grasso wouldn't be happy, and Jimmy McGuire, our specialist, wouldn't be happy. It wouldn't bother me and Charlie at all. We would keep selling bricks, selling deli bars, selling candy, writing insurance. A lot of people have private companies and they never get a quote on them. We bought See's Candy in 1972. We haven't had a quote on it since. Does that make us wonder about how we're doing with See's Candy? No, we looked at the company results. So there's nothing wrong with focusing on company results. Focusing on the price of a stock is dynamite, because it really means that you think that the stock market knows more than you do. Now, the stock market may know more than you do, but then you shouldn't be in stocks. I mean, you should have, the stock market is there to serve you and not to instruct you. So you need to formulate your ideas on price and value. And if the price gets cheaper and you have funds, logically you should buy more. And we do that all the time. Where we make our mistakes, frankly, is where we focus on price and value, and we start buying and the price goes up a little and we quit, like Charlie referred to, we might have done on See's Candy. A mistake like that cost us $8 billion in the case of Walmart stock a few years ago because it went up in price. And we are not happy when things we're buying go up in price. We want to go down and down and down, and we'll keep buying more. And hopefully we won't run out of money. Of course, that's a different story. Charlie?